Joining us now is Evan Clark, Deputy Managing Editor of Women's Wear Daily. Evan, it's good to have you with us. For Barneys, this is a company, even if you didn't shop there, I think almost every American is familiar with. What does this mean?
Oh, absolutely. So it's a big change in the world of high-end kind of designer fashion, and Barneys has been sort of a really guiding star in the retail scene for many years. It's the retailer that introduced Armani to the American market, and it's always been known for having a sharp eye for identifying new design talent. So, but the world has changed. It's much more digital. There's a lot of stuff going on, and ultimately some kind of changes in its cost structure really got tripped it up here. But yeah, this is a big blow to fashion.
Well, this isn't the first time that Barneys has had to make a move like this. Over 20 years ago, the company did go into insolvency. How did it emerge then, and how do you expect it to emerge now?
Well, it could be very different stories. So in kind of both cases, we see in the 90s, it was a big overexpansion. So they ended up kind of they had found themselves with too many stores. They had to go into bankruptcy court and kind of clean that up, and came out really in kind of a leaner, meaner retail machine. And that really worked for a while. Now it is planning on closing stores. So there is kind of an expansion element to that. But I think the future is very murky for Barneys here. For weeks and months, fashion's been watching the business very closely. A lot of people were worried about it just being liquidation outright. So I think what we kind of see now is the bankruptcy court has really kind of started the clock ticking here. They have to find somebody who is going to who would buy the chain and with a plan to kind of move forward. If not, we could end up seeing this being a kind of an intellectual property play with a brand company kind of picking it up and using the brand name.
Evan, we talk a lot about the risk factors out there for many industries. For the retail industry, certainly the trade war is set to impact a lot of these retailers, and we've seen that threat play out in the stock market, but also just changing consumer trends. I mean, presumably the high-end clientele has more money in their pockets because rates have been so low. But what's the Barneys specific story as to why it does need to file for Chapter 11 now?
Right. So after the other bankruptcy, they ended up with a long-term lease on their Big Madison Avenue flagship, which kind of locked them in at lower rates for, I believe it was 20 years. And last year, there was an arbitration ruling that kind of said, no, the landlord can move the rent up to market rates. We've reported that their rent on their kind of premier store there almost doubled to $30 million last year. And ultimately, that was just for a company this size, the cost structure just couldn't handle that.
So Barneys also trying out new ideas to try to appeal to younger shoppers, to get them in stores. Cannabis shop in Beverly Hills, for example. In recent years, we've seen Nordstrom try to change its store format in order to compete with e-commerce. How can this work for Barneys? Would this work for Barneys?
To compete with e-commerce?
Yeah.
So I think, it's interesting. So we've seen a big, e-commerce has not taken over the world, but it's become a big kind of meaningful part of the retail equation. So retailers have been really trying to play to their strength, and that's kind of become places where you can have experiences, where you can interact with the brand. And Barneys has always been a very refined, very high-touch environment. It's a very comfortable place to shop. You've got great salespeople. They're really catering to you. So they were trying to provide that experience. I don't know what the future holds for retail exactly, but everyone the betting right now is that the physical stores really emphasize the experience, because that's what they really have to differentiate. If you just want to get a pair of shoes, even if they're very expensive, high-end shoes, you can largely get them online.
It's interesting, Evan. I was reading a stat that already this year, at roughly the halfway mark, 7,000 retail stores have closed, and more closures are expected through the end of the year. Obviously, this doesn't just apply to Barneys, but hundreds, if not thousands, of other retailers out there. You mentioned that you're not necessarily in the market to say what the future of retail holds, but what are the big stories on your desk that you're following when a lot of people are trying to make sense of what a new world in retail looks like?
Right. Well, so I think the store closures are for sure. It's an important story. I think you've got the online piece of it. So you've got e-commerce growing. You also have a budding market in rental. We see from Rent the Runway, resale, which the Real just went public recently. So I think we're seeing those are kind of, if you take those three and you've got e-commerce, rental, resale, the three of those businesses are really getting a lot of share from retailers, but none of those kind of lines of business are really super inherently profitable right now. No one's making tons of money really anywhere in there. So that's really hurt the economics of the store base. I mean, I think in the end, people are still going to be buying stuff. People are wanting things. The priorities are shifting towards more experience or maybe fewer, better things. And I think the industry, kind of the new digital players and the legacy brick and mortar players are all just figuring that out. And no one's making a whole lot of money while they do that, but the industry will get there.
All right, Evan Clark from WWD, we got to leave it there, but thanks for joining us.
Good to see you, Evan. Thank you.
Thanks, guys.